So yeah, they do like that kind of management side of it.
So I'll quickly ask you, because it says, which I was reading on this, lower profits this year, but they managed to boost the dividends by 31 billion.
And you've
in the
gone back
fourth
to
quarter.
I don't know if I can pronounce it.
Aramco, yeah. I just wanted to ask, how can you have such a lower profit but be able to boost your dividends so much? Is that just,
that's the cash holding within the company, though, isn't it?
Yeah.
so it just literally doesn't matter.
So dividends, you can base it on retained earnings. So
Yeah.
Technically, it needs to be based on profit, obviously.
Yes.
But there's still
that much profit that it makes no
profit there.
difference.
Exactly.
Yeah.
Still plenty of profit, even if it's falling. Yeah. And I think, like, going back to Q1 2023, Nvidia, I think they announced lower profits at that point.
Yeah.
But the guidance was so absolutely incredible.
God.
And then they repeated it. So
It's not low profits right now.
Yeah.
That place is...
And actually, you mentioned, because you mentioned last time we spoke about buybacks.
Yes.
And it's an interesting thought, buybacks
within the company,
buybacks versus dividends. But there is, and again, Nick from DataTrek, he's done some work on that. And actually, buybacks can offer as much value to shareholders as dividends can.
Okay.
Because of what they represent. So, the firm is effectively saying, the controllers of the company are saying, we're that confident in what's happening going forward, we're going to buy some of these shares back.
Yep.
So if, let's say, for numbers, it's numbers, say the stock price is $10, pounds, and they buy back and they increase the stock price to 12, it's actually benefit the people that own the stock more than if we'd given you an increased dividend. You've still got a dividend, but actually what we've done is increase the value of your portfolio more than putting the cash back in your pocket.
Instead of 50 cents in the dollar.
Which, in most cases, I'd like to think if you're invested in a good company and you've got a dividend stock, you're probably buying back the stock anyway.
Yeah, and if
in
absolutely
reality,
because of the dividend,
because of the dividend,
and if you've got a strong, well diversified portfolio, you'd like to have some of those dividend players and some of those growth.
Plus, if you've got a good company, like if it's our company, and I want to control more because I'm proud of it, and I know what we've got brewing for the next 3, 5, 10 years. It's going to be worth to us so much more, especially if you own a percentage of the company anyway.
And we had that a lot actually in quarter four, didn't we? A lot with earnings calls that we heard about this quarter. A lot of buybacks were announced. And that's it's a way of supporting what guidance they're giving for the next quarter or next year, how they're going to do. Buying some share back is a confidence in the management.
Confidence in
do you
the
think the buyback also ties into the increased interest rates, because therefore, like, you're going to make more money on that cash reserve anyway, so we're buying more stuff back on that sort of side, or not really?
No, I don't think so. I think it's more a kind of demonstration of confidence in the business plan and the strategy.
It's a statement out.
Yeah, it is a statement.
If we've got nothing to announce, we'll do that as a statement because at least we've got something to say, and that's usually a positive thing.
Well, it's really interesting to say that because guidance matters.